Hi, this is Alessio. Hope you're well and welcome to this video. In this particular video, I want to talk to you about the one mistake that has cost me thousands of dollars. It's one specific mistake you're probably making right now in your trading, and I want to show you how we can fix it, how we can avoid it. Before we start though, you probably guessed that I'm speaking in front of a green screen, as you can see right here. So that means I could put whatever I want now behind me. For example, if I press this button over here, I could put the most overused scene in every movie you've ever watched. Yeah, and if I press this button over here, I could put the chart of Bitcoin or the markets. Oops. Okay, now we're in a Pink Panther cartoon. I love this cartoon. And if I press this button over here, okay, now we're in a Laurel and Hardy film. Oh, by the way, I love this bit over here. It's my favorite bit coming up.
Hello! Say, what's the idea of sending every Tom, Dick, and Harry up to this room?
What'd you say?
Never gets old, never gets old. All right, let's get back to what we were talking about before. So, what is the one big mistake that a lot of traders make? It's one mistake I've made as well, by the way, which could potentially cost you thousands of dollars. And in case you're wondering, no, it's not about stop loss placements. It's not so much about risk management, although those things are important as well. No, I'm talking about not having a proper exit strategy or a proper exit plan to take the majority of your profits. And that is a failure to take profits at the appropriate time. Or in other words, having a proper exit plan. So let me just give you an example of this. About a couple of years ago, back in 2018, in late 2018, I was shorting the stock market. I was shorting the S&P, as a matter of fact. Now, to be fair, I got a bit quite lucky as well because the market crashed really hard. I mean, the momentum on that drop was just so swift, so strong, and it pushed the S&P significantly lower. And then what I was doing was essentially, as the market was dropping, I was also looking to eventually take profits. But one interesting thing that made me want to take profits, and by the way, that particular trade, it made me about 6,000 pounds, just close to 6,000 pounds approximately. And what I was looking on the chart was, as the S&P hit oversold conditions, I mean, it was extremely oversold on Christmas Eve, as a matter of fact. In fact, we had extreme oversold acceleration extremes, as you can see here from that red acceleration extreme on my chart. Essentially, these oversold readings got me thinking about, you know what, it's time to take the biggest portion of my profits here at this very level. And that's what I did. So that specific trade banked close to about 6,000 pounds or approximately about $8,000. A number of times also in 2019 and last year, I was shorting the market, and some of those trades actually were doing okay as well. But I can tell you this, guys, from my experience, the number one mistake that I have made that has potentially cost me thousands of dollars is not taking profits along the way, especially in short trade setups. In other words, when you're betting against the market. Again, the reason why shorting the market, in other words, betting against the market, the reason why you want to be very nimble in your trade, and by nimble, what I mean is you need to be alert that the market could reverse direction very quickly. And the markets can be very fickle, especially in uptrends. When you have a strong uptrend and the market starts a correction or a drop, often those drops, again, in those uptrends, can become truncated. In other words, those drops can end abruptly and then suddenly go back up again. So we saw, for example, in 2018, I think it was late 2018, when the markets hit oversold conditions, the market had a very steep bounce, but it did not look back. It just continued going back up. Same thing happened, by the way, this year in 2020. After you saw, for example, the crash that occurred in March of this year, notice the bounce that occurred just did not look back. A lot of people were expecting another retest of the lows, maybe another lower low. The fact is the market said, no, I'm done. I'm going back up. See ya. Wouldn't want to be ya. And it just continued going higher. So the thing you need to appreciate, guys, that when you're shorting the market and you're going long the market, you need to have an exit plan. By the way, a great book I highly recommend you read is by top trader Linda Raschke. The book is called Trading Sardines. I highly recommend this book, written by a fantastic trader, someone that I deeply admire as well. Linda Raschke, by the way, for those of you who don't know, is one of the traders that is featured in the book Market Wizards. I think it's the new Market Wizards or the original, I'm not sure. But anyway, it's one of the greatest books that is ever written. I actually interviewed Linda Raschke about, I think it was about a year ago. And, I asked her this question, about the point about exit strategies. And she said that it's really important that you have a trailing stop.
I don't understand why you can't simply trail a stop. I don't understand what's so difficult about that. I mean, who knows where it's going to end, so ride it. When anything gets parabolic, pure technical analysis will tell you that that is not sustainable once you hit a parabolic phase. So you have several options. You can scale out, you can keep tightening up your stop. I don't understand what the issue is with trailing a stop. You still have to evaluate that You know, where's your risk? How much are you willing to lose? All that kind of stuff.
So this is one thing that I really believe in as well, trailing stops. So for those of you not familiar with this term, trailing stop, all it means is that as the market is moving in your direction, you want to move your stop loss down with the price. Not too close. You don't want to keep it very close to the price, because what would happen is the price could suddenly spike into your stop loss, could move into your stop loss and quickly stop you out. So you want to keep it a safe distance. I would say you need to have a balance in your stop loss. You need to strike a balance between, again, profit protection, protecting most of your profits, but also you want to give it some breathing distance, some wiggle room, as my good friend Charlie used to say. So what I would say to this end, guys, look, there is no perfect trailing stop method. There is no perfect exit strategy. But the point is, as Linda Raschke says in the book Trading Sardines, is you need to have an exit strategy. And especially if you're short. I would say it doesn't matter whether you're long or you're short. You need to have an exit plan. Even for those of you who have, long-term expectations. If you're in a trade or in a position for the long term, I still think having some kind of an exit plan is better than nothing. Okay, because it saves you a lot of frustration. Imagine being long on a market for years. Okay, imagine buying into something like Bitcoin or stock markets for a long period of time, and then suddenly one crash wipes all those gains out. So that's why I think it's a good idea to have some kind of an exit plan, trailing your stop loss up or trailing your stop loss down, depending on whether you're long or you're short. Now, one particular strategy that I personally like to use when I'm shorting or going long for a trailing stop is to use velocity, LT velocity. I quite like to trail my stops. For example, if I'm short, I will trail my stops lower on the LT velocity position. Or if you want to use a moving average, you can do that. You can use a 21 moving average on your chart. Or you can just trail your stop based on the last resistance point. For example, a previous resistance or previous support point. If you're long, you can trail your stops based on support. If you're short, you can trail your stops based on resistance. So whichever strategy you use, it doesn't really matter. It's a matter of style or preference. The bottom line is, as Linda Raschke says, just have an exit strategy. Just have an exit plan. It's better than nothing. And that will save you a lot of frustration. Because here's the thing, guys. The biggest mistake I've made, which again has cost me thousands of dollars, is occasionally I get into a trade, I become very comfortable. I keep thinking, and this is the biggest mistake people make. Often we talk ourselves into, thinking the target is much lower than we expect. And this is what happens. You become very complacent. You become very comfortable thinking that the market's going to go lower than what we expect, especially if you're short. And it doesn't move lower. And instead it moves the other way, reverses. And then what happens? All those gains you made when you were shorting, boom, evaporate in a single week or a single day, for example. The same thing can happen if you're long. If you have targets that perhaps are unrealistic, or perhaps your targets are not met, then the market could just quickly reverse and then immediately go against you. And then all those gains you made while you were long, all that profit gets evaporated in a single week or month. So if there's one thing I would say to you guys, again, just have an exit strategy, an exit plan. And again, it's up to you whether you want to decide to take the majority of profits or 50%, 1/3, 2/3, that's completely up to you depending on your strategy. All right, guys, I hope this video helps. If it has, please give it a thumbs up and look forward to seeing you guys in the next video update. Cheers. Bye for now.